This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. New G7 and European Union sanctions on Russian oil exports will have a muted impact on flows and global prices according to analysts polled by Reuters, as Russia is set to largely succeed in rerouting its trade eastward. The market is set to be deprived of a maximum of 2 million barrels per day, BPD, of Russian oil in the short term once the measures take effect on December 5, and possibly none at all, a range not seen moving prices much upward. The survey of 42 economists and analysts provides one of the most comprehensive perspectives yet of how the industry views the ambitious plan to deprive Moscow of revenue, revealing uncertainty on its impact but little deep concern.
Oil prices rose on Wednesday after industry data showed a surprise drop in U.S. crude stocks, suggesting demand is holding up despite steep interest rate hikes dampening global growth. Brent crude rose 54 cents, or 0.6%, to $95.19 a barrel by 0723 GMT, while U.S. West Texas Intermediate WTI crude rose 72 cents, or 0.8%, to $89.09 a barrel. The benchmarks rose about 2% in the previous session on a weaker U.S. dollar and after an unverified note trending on social media said the Chinese government was going to consider ways to relax COVID-19 rules from March 2023, potentially boosting demand in the world's number 2 oil user.
Moving on to the top news in the energy sector.
The European Union is exploring ways to increase help for Ukraine's energy sector following cruel and inhumane Russian attacks that have caused widespread power cuts, EU Energy Commissioner Kadri Simson said on Tuesday. Visiting Kyiv to show solidarity with Ukraine after Russia stepped up its missile strikes on Ukrainian power facilities in recent weeks, Simson said foreign companies should be urged to prioritize the transfer of energy equipment to Ukraine. Russian attacks left many Ukrainians without electricity or water on Monday, and rolling power cuts have been introduced to save energy while engineers carry out repairs.
Germany will introduce a price cap on electricity for households and industrial consumers as part of measures to help Europe's largest economy weather an energy crisis, according to a draft document from the Chancellery seen by Reuters on Tuesday. For industrial consumers, electricity will be limited to 13 euro cents per kilowatt-hour, kWh, applied for 70% of the previous year's consumption, according to the document. For households, prices will be capped at 40 cents per kilowatt-hour for 80% of basic consumption, it added.
Next, we have the top news in metal markets.
Prices of base metals rose on Wednesday, supported by a weaker dollar and concerns over supply crunch in the physical market, although cautious sentiment prevailed ahead of a key U.S. Federal Reserve rate decision. 3-month copper on the London Metal Exchange was up 0.8% at $7,713 a ton, as of 0427 GMT, while the most traded December copper contract on the Shanghai Futures Exchange rose 1.7% to 63,750 yuan, $8,766.26 a ton. The world's biggest central bank is due to release its policy statement at 1800 GMT, where a 75 basis points, BPS, hike is widely anticipated by the market.
Gold prices rose on Wednesday on a softer dollar, while market participants awaited a U.S. Federal Reserve policy statement that could provide clues on the pace of future rate hikes. Spot gold was up 0.2% at $1,650.49 per ounce, as of 0717 GMT, while U.S. gold futures gained 0.3% to $1,655.30. The dollar index dipped 0.3%, making the greenback-priced gold less expensive for holders of other currencies. We will now look at the top news in the agricultural sector. Argentina's government is set to announce measures, potentially within days, to allow wheat exporters to delay agreed shipments after a major drought hammered the crop, raising concern about domestic supply. A source at the country's CEC Grains Exporting Chamber, which represents companies buying the grain, said measures would be released, in the coming days, to allow firms to reschedule agreed wheat exports without facing the normal 15% fine from authorities. A government source with direct knowledge of the matter said that measures to permit wheat shipment delays were probable. It's being studied, the source said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.